We told Jackson we would get him an FTMO or top step payout, and if we failed, we refund him the challenge cost.
Good morning. Good morning, everyone. Welcome to another live trading session here with me, Myrick. Today is Monday, July the 20th. Wow, this month is just flying past. So I've been working on this live stream. Today, hopefully, we got a little bit better quality. I got my camera working better, the one that I like, as opposed to the I just had the built-in camera on my MacBook. So my wife got me this nice setup with the camera and microphone, so it's I'm working on getting it working the way it should, and today I think I got it working. I got my chat up, so if anyone is in the chat want to talk back and forth, and we can bounce some ideas off each other, feel free to subscribe, and then we can chat. I got the chat up running, so it's still a work in progress, so bear with me if we have any technical difficulties. I'll work through them as best I can, but so far so good. It took me a while, but I think we're getting it to where it's supposed to be. So I'll be switching back and forth from the screen. This is my IQ Capital 50K eval. We're still in the eval phase. This is my pre-opening warm-up screen. I like to use this account because I love the platform. It's a new account for me, first time trading with IQ Capital. I've had nothing but good to say about them. Also, if you want to trade with this prop firm, they're offering an amazing welcoming package, $9. That's right, $9 for a 50K account. Use code MAV, help support your boy, and we can be trading on the same screens. Well, not the exact same screen, but the same setup. You'll see this setup here, and you can do it the way you like. They have nice different layouts that you can choose from and create your own little vibe. So yeah, I like it. I have nothing but good to say. I'm currently on the dark theme, the deep dark. Oh well, that's another theme there. That's the deep light theme. This is the deep dark theme. I like the deep dark theme. So yeah, that's where we are right now. Let me get my screen back the way. Yeah. So right now we'll just play a little catch up here. This is my 1 minute chart. I'm waiting for, on the pre-market, I'm waiting for this candle to inverse this 1 minute fair value gap. You can see we're kind of bouncing in this range here. So to catch everyone up on what we're doing here, I'll be going back and forth. This is our trading view screen here. So we'll just start from the top down. So right now, this is the monthly chart right here. As you can see in the monthly chart, we're in an overall uptrend. However, we are in a pullback. Each one of these candles represent a month. So in this current month here, you see this black candle is bearish. So we're in a bearish trend for this month. So a minor pullback. So sometimes you'll see we'll go in an up phase. You have a pullback, up phase. So we're in an overall uptrend. But right now we're in the pullback phase, kind of similar to here. And what's interesting about this, last week, what happened was we pulled back into this monthly fair value gap. This is a bullish fair value gap, buy side, sell side inefficiency. So we call it a BISI, buy side, sell side inefficiency. So once we hit this, and once we hit this monthly fair value gap, let me adjust this here. So with this monthly, so actually I'm gonna pull it to here. That's where we are there. Well, let me double check something here. Let me double check. Okay, you're right. So that's our weekly. So here, what we are is in our monthly. So honestly, well, let me make sure, because I got to make sure my settings are correct here. So make sure my settings are correct. Okay, my settings. See, that makes a difference. When you go down here and make the adjustment, your settings are correct. So you see how when I press here, how my candle ends here, and now my fair value gap is off. So I have to make sure that my settings are correct. So when you go here, now you see how that fair value gap touches the bottom of that wick. So that's not the setting. I want this setting here. So that's my true setting there. So we'll bring that back up. So I knew something was off. So that was it. So I was correct there. So boom. That's our fair value gap for the month. I'll lock that in. And I do lock that in just in case my settings do go off sometimes. So I'm going to make sure that we're good. Okay, cool. I'm gonna take that off there. Boom. All right. Boom. All right. So last week we tapped into our monthly fair value gap, which sparked an immediate rejection, to the upside. So that there tells us that, although we are in this pullback phase, we are rejecting on the weekly here. So this was last week's candle. We came into this weekly fair value gap, and we still respected consummate encroachment of this weekly bullish fair value gap because we wicked past it. But if you notice, we didn't body below consummate encroachment. So we wicked past it, tapped into our monthly bullish fair value gap and immediate rejection. This week we opened above consummate encroachment, and we're looking at continuation to the upside. So we have some strong bullish sentiment here with a weekly and monthly bullish fair value gaps pushing upward. So that's where we are currently on the higher time frames on the weekly. So we are in alignment on both the monthly and the weekly. Now here on the daily, we have here on the daily, so a previous day we rejected from this bearish daily fair value gap, which it doesn't look that far, but on this daily, so we're about 215 points away from that daily fair value gap. So that's an interesting draw on liquidity right there. That right there would be my draw on liquidity if I was to take longs, looking long here. So as of now, on the monthly, weekly, and daily, we are looking at more of a bullish sentiment there, bouncing off that weekly and monthly bullish fair value gap and headed towards that daily, fair value gap. Also, we crossed those London lows, swept some liquidity there. We came down. So that's liquidity that's been swept on the sell side, as well as these higher time frame PD arrays. That's going to be pushing us upwards for those longs. Here on the 4 hour, you can see we've created kind of a bullish trend here. So on the 4 hour, we've had here, it was a bearish, we have a bearish trend, and this was back on the 15th. This is back on the 15th. We started going down all the way up into, this is like 2 days worth of price action here to Friday. So this was about Wednesday of last week to Friday. We have here. So we bounced into this monthly fair value gap. Now we're headed upwards towards, this is through Sunday. This is, pre-market action here. And now we're here on Monday. We inversed this 4 hour bearish fair value gap. We inversed that there, retested consummate encroachment, respected it. You see here, we respected consummate encroachment of this 4 hour fair value gap by wick. The wick didn't even touch it, so quite bullish there. Came up to this bearish 4 hour fair value gap. Wick completely passed it. Now we haven't closed this 4 hour. We have about an hour left in this 4 hour candle. So we wick completely past it, which is indicating higher prices. However, it's not quite ready to go up yet. Because remember, this is pre-market. All this is pre-market. So during the opening, what I'm looking at, we may look at some retracement to the downside in the opening. Wick get some of this, fill in some of these gaps here that were created during pre-market. Maybe come down, sweep some lows, and then headed up towards our draw on liquidity, which is our daily bearish fair value gap. So depending on pre-market, if we manipulate to the downside, that would be good if we're bullish, looking for longs. Manipulate to the downside, sweep some of these lows here. So in order to see that better, let's go down to the lower time frames here. Let's see. So once we're down here to the hourly, so if we were to, during pre-market, we've created all this bullish all this bullish activity here. If during the opening the market decides that it wants to balance out some of this bullish price action by pulling back, creating a higher low, we may pull back as far as to this 1 hour bullish fair value gap that was created while we were going to the upside. Pull back to this 1 hour, test this 1 hour, just like we did here at about 5 a.m. during this was London. We tested this 1 hour and went back up. So that would be good cause as to come down, and if we don't tap into this 1 hour again and sweep this low, at least tap into some of this this bearish activity here that was created there, which on the lower time frames would look like a bearish order block. So, but we could go as far down as to tap in to consummate encroachment of this 1 hour fair value gap before heading up. So going even further down into the 15-minute chart, we're currently in a 15-minute fair value gap, which was inverse. So this was a bullish 15-minute fair value gap, which was created here between these two inefficiencies here. This gap created this bullish 15-minute fair value gap, came down, closed below, which inversed it. Now we're starting to reclaim that bullish fair value gap, which you got about 11 minutes left in this 15-minute candle. So it looks like it's trying to reclaim this 15-minute FEG, which would indicate further continuation to the upside. We have a small bearish fair value gap here that was created, which also inversed. So we'll just pull some. This is some this was some of the markings that I created earlier. So I'll just get rid of that there. So boom. So this is quite important because it inversed. Now it's reclaiming this area. So we could come up, reclaim this bullish FEG and break these highs, come back down for a retest. Looks something like this. Come up, break these highs, down for a retest of this area and shoot back on up, and that would be our draw on liquidity, which would be that bearish daily fair value gap. In this line here, this would be the liquidity. It's being swept there into this daily fair value gap, which from there we could continue a little bit higher into the higher time frame level here that I have marked, consummate encroachment of this daily fair value gap, and maybe retrace downward for another pullback, which it could either create a higher low and continue higher, or we can continue with our bearish trend that's been created in the last week or so. So, but immediately speaking, that's what we're looking at. We're looking at some retracement to higher prices with a daily draw on liquidity at this daily bearish fair value gap. Right now, we're in kind of a bullish phase, which will be the pullback of this bearish trend. And we're just trying to see at the open, are we going to manipulate lower and create a higher low and continue to our higher time frame drawn liquidity, or will we see a rejection here and a continuation at the open, a rejection from these higher time frame PD arrays and a continuation to the downside? So that's what we're looking at there. That's why I kind of wait till the volume kicks in at the open and we can see what the market is trying to do here. So we're either looking at a continuation or we're looking at manipulation to the downside and higher prices to our daily draw on liquidity. And then from there, we'll reassess and see which way we're going overall, basically for the week. So that's kind of where we're at right now as we speak. So that was the 15 minute. So right now we're trying to see if price will respect this 15-minute fair value gap, and that's what will bring that there. So we have a bearish 15-minute fair value gap that was created on our way down. So that being said, if we inverse this bearish 15-minute fair value gap and turns bullish, that would be good indication that for higher prices. We got about 7 minutes, so we'll see where we are, and we're getting closer to the open. So my pre-market warm-up, I haven't taken any trades yet, but we're getting kind of tight here. It looks like we inversed this 1 minute. Looks like we inversed our 1 minute here, came back for a retest. So I'm going to sit here. I'm going to put in for as we get closer to the open, I get kind of hesitant. So, because we're at 9:08 right now, we still got some time. I think we may even shoot up here to these highs. So if I do, I'll take a small J. Right now we're pulling back for a small. So we inverse here for a small retracement. We inverse here. We have another 1 minute fair value gap here, which it wicked down to the bottom. Now we're going up. So if we break these candles, the previous candle high may jab there for a pre-market long, at least to these highs up here. See where we're going, because the market could very well, when it opens, shoot up for manipulation to the upside and come back down, as we do have some targets to the downside. We have midnight open down here. We have some inefficiencies. We have these lows. We have London low down here. We have some objectives to the downside as well. So market could go up and shoot higher, manipulate higher, rejection to the downside, and we could be on that first half of the day, that AM session, could see the market sweeping these sell side objectives here. So either way, that's what we're looking at, and that's why we tend to wait until that volume kicks in to see, and at the open, to see which way the market wants to go. So, but right now, on our pre-market warm-up, what we do is we take some indications as to what price is doing now, and it inversed this 1 minute fair value gap, came down, retested this second 1 minute fair value gap, this bullish 1 minute fair value gap. It respected it so far. So as of now, we're looking to see if price breaks those highs there. But honestly, I'll even take it a step further and break it down to this high here. Price breaks that high there, we'll go ahead and take a short. We'll put on 2 micros. We'll see what it does. And you can warm up, get, pad that account to the upside a little bit. See where we go. So looking good. All right, so it looks like we broke that high there. I'm gonna put on a buy there. And what we'll do here is we'll just go to here, and we'll put a stop loss here. bottom of this fair value gap here. I'll just put it here because if we're wrong, I'll put it here because if we inverse that fair value gap there, I don't want to stay in this trade. So that's what we'll do there. So we're testing the bottom of that. We're testing the bottom of that 1 minute fair value gap there. If we come down and inverse that fair value gap, I kind of feel like we'll shoot lower for lower prices at the beginning. And I don't want to put this account too far in the downside on a pre-market trade. So we'll go ahead and close that out if that seems to be what's happening. And it looks like we created a small bearish gap there to the downside as it pulls back after we broke that little 1 minute high there. Looked like it was respecting this 1 minute order block. So what I'll do here is see how far did we tap into. So we still have some time to get into that order block there. We may get tapped out here. If we do, we're just going to take that and we'll look for a better entry. But I'm not going to hold this trade in the pre-market for too long. And so it looks like we'll get tapped out there. To see, we may have just been a little bit too early. I was assuming that since we broke here, came back down, and then broke that high, that we continue higher. But it looks like we broke that high, came down, starting to slow up here, respecting this bullish order block on the 1 minute. So we'll see. We'll see if it's going to respect it enough to continue to the upside, or if it's going to tap us out because we were just a little bit too early and then shoot for higher prices. But either way, I'm not going to hold it and dig us too deep of a hole here. We've been doing pretty good on this account. So yeah, so we'll go ahead and take a little paper cut there, about $100. Of course, as soon as it taps us out, it wants to go to the upside. So we may have been a little bit too early there on that trade. But either way, we'll see what's going. We'll see what price has in store for us, and we'll just look for a better entry here. But that is pre-market, so I'm not going to hold too much weight. I take these trades to kind of get a feel for the market and see what's going on. You know, trying to ease in to a rhythm to see which way we're going here. So it looks like we're creating a higher low, which may be an indication. Yeah, so we'll go here and see. Let's see what's going on. So either way, it's not going. We're not seeing too much speed to the upside. It's slowing up downside. So it's kind of like hanging out, you know, trying to see which way it wants to go. On the higher time frames, we rejected heavy on the 15 minute. That's a long 15-minute wick there, rejecting from that 15-minute fair value gap. So on the 5-minute here, you see a little bit of consolidation here that shows a lot of indecision as to pre-market what it wants to do, because pretty much leading up to the open, we got about another 15 minutes here to the open. Leading up to that point, the market was pretty much confident in what it wanted to do. what it wants to do. Hold on 1 second here. There we go. I had to send someone my link there. Maybe joining us here on our live feed, which is pretty cool. So get that going. Yeah, I'm just starting out here with our live trading. So I check my views and things. It feels good. You see people are checking me out. I've been creating a few little shorts here so people can find me. I realize it's not the highest quality. We're going to experience some technical difficulties, but if you bear with me and work with me, I promise we'll get better each and every day, and we'll grow, we'll learn, and experience the highs and the lows, and go from there. So back to this pre-market. What we're doing is checking the 5-minute here, because we took a little small paper cut on that trade. Looks like it's going to the upside. I may take a jab just to get back into those highs there. So again, on our pre-market trades, I don't put too much weight on these trades, just trying to catch a rhythm for what the market's doing. Looks like we may be creating a higher low here and going to the upside. Let's sweep this little 1-minute high there. We got about 10 minutes into the open. If I take another trade on this pre-market account, it's going to be sooner than later. Which I may shoot it there. Just put on 2 micros and see. So I'll put that on there. Just put on small 2 micros to see where we can go on this little pre-market warm-up. So I'll put a TP here. We'll shoot for this low-hanging fruit here. These highs here. Now if we sweep into here, that would be good too. I will drag my stop loss up there to protect some of those profits, just to get back a little bit of what we took on the chin a little bit earlier. So we'll put our stop loss here. So we'll see. We shall see. Honestly, like I said, so if we put our stop loss here, take about another $100, $130 paper cut there, but those paper cuts add up. So if we aren't right on this one, if we got in a little too early, whatever, that would be it for this account on my pre-market, and then we'll just wait until market open and take some more higher probability trades here. But right now, just trying to get a feel for the market, trying to catch a rhythm. It looks like we're getting to the upside here. Earlier we put on 2 micros. We were just a little bit early on those longs. I was shooting for those highs there. The market broke the little interior 1-minute high here and pulled back, created a higher low into this 1-minute bullish order block here. And now we're going up, slowly but surely, going up to maybe sweep these highs here. Hopefully market open may catch some volatility to the upside before heading downward. So we shall see. We shall see. But either way, it's completing its objective here by allowing us to catch a rhythm for the market to see which way the market is going, how price is acting, and it's one thing to look at it and to analyze it and to mark your charts up. It's another thing to put on some risk and actually experience what's going on with some emotion. And that when the market opens, you can say, okay, I know what's happening here, and it allows for me anyway. I'll speak for myself to have a little bit more patience. I've already put on a few trades pre-market, although it wasn't a whole lot of risk put on. It still creates some emotion there. So I put on a few trades. I'm not anxious. I'm not itching to take a trade to start. So when market opens and I switch over to my other account, I'm patient. I'm looking for that A+ setup. I'm looking for a higher probability trades there. And having got warmed up in the pre-market, taking a few little trades there, it for me, I found that's been the best way for me to work on discipline and exercise some patience here. And it's been working out pretty good. On this account, we're up about $1,600 on this account, just taking small pre-market trades. Mondays are usually a little, you got to shake off the weekend, dust the cobwebs off. So Mondays have generally been a little up and down when it comes to me putting on trades. So we took a small paper cut on this first trade, put on 2 micros. It was for about $100. Run our second trade, 2 micros. If it stops us out before it hit TP, that'll be it for my pre-market warm-up, and we'll just say, hey, it cost me $200 to see what the market was doing this morning. And when we switch over to my other account, which I use to take trades for after the market opens, I got a better idea of what's going on. So that's that. Just the cost of doing business. It's not a loss. It's a win. So I've already accepted the risk. I've already predetermined what I'm willing to sacrifice on this account today, and that's the way I see it. That's my perspective. So it's about 9:25 now. We got about 5 minutes till the open. We see some volume spiking, some volatility spiking here. You see those candles starting to react a little bit more volatile as we get closer to the opening. A lot of indecision here. We see some resistance here on the 1 minute. On the 5 minute, basically. See the same thing. We've bodied above consummate encroachment of this 5 minute fair value gap. However, we've come up into this 5 minute little order block here, which is creating some resistance every time we touch into this area here. So what we're seeing is, you see this down candle here. Well, we have a down candle and we have an up candle here. So this up candle here, this last up candle before the displacement to the downside, is creating some resistance. On a good note, as far as the long that we took, this middle line here is consummate encroachment of this bullish fair value gap. So the gap here that was created on the way up on this 5 minute chart, this is halfway in between that gap, this wick and that wick. So being as though we've bodied above consummate encroachment, that is a good bullish indication that we may shoot for at least the top of this box here. So let's see. So we did sweep the top of this area here. We are currently up in our long here. I'll hold this trade and see if we can get up a little bit higher. Body above, we get a body above this line here. I'll drag my stop loss up to protect what profits we have, and that'll cut down on some of the the bruising that we experienced on that first trade. So we've got about 3 minutes left to the open. As we get closer to the open, it's starting to manipulate to the upside. That usually tells me we may spike up first at the open, hopefully, and then continue downward for a manipulation to the downside and then long. So that's my expectations as of now. But as I see these candles going up and down, and I get a good idea for what's going on here, I'm more apt to try to protect what profits we may experience on this pre-market. So let's see. So it looks like what's going on now, as we get closer to the open, price may want to shoot to the downside first before heading up. So we shall see. And if that's the case, I don't have to wait for it to hit TP. I'll cut it. For it to hit my stop loss, I'll cut it short and take that for what it is. But we are experiencing some rejection here. This low, it's respecting this low here. If we break this low here, probably won't hang on to this trade too much longer, and I'll close it out, and then we'll just move on to the open to see what we get from there. So if we sweep that low, I won't close it right away. I'll look at it maybe as a little bit of fuel for price to go to the upside. I just hate for it to hit my stop loss, then shoot to the upside. That always sucks, but it is what it is. I'm not going to pull my stop loss down. It's like I said, it's pre-market, trying to get a feel for the market, see what's going on, catch a rhythm. But yeah, there we go. We are at the open, 9:30. Here we go. We got a nice move to the upside. I'll pull that stop loss up there, protect what we got there, and hopefully that'll be enough.
Order
Boom,
filled.
there we go.
Order canceled.
So we may see some more continuation to the upside. We're still at like a $70 deficit on the. So I do like more upside here. So I'm going to be greedy. I may be greedy. And if we body above this line here, going for another buy. For me, this is still pre-market because I won't take a trade for the first 10-15 minutes of the open on my other accounts here. So let's see what we got. Let's see what we're going. We're going to shoot higher. Let's see. Let's get it, and I'll just close it manually here. There we go, and I'll close it out there. Boom. So now I got a feel for what the market's doing. We're going to keep our streak going on this account. We're up $56 on this account, down from $100. So I'm pretty happy on my pre-market trade here. And I cut that short because we could go to these equal highs here. This is a nice tasty draw on liquidity here. Price may want to sweep these highs before continuing down. But at the open, we still are in the manipulation phase. So what I'll do now is I'll switch to my Lucid account here. And this is, here we've got ES and here we've got NQ. I like to keep both charts open to compare. They usually correlate with each other. I look for SMTs on these accounts, meaning one may sweep the high, one may not sweep the high, and that would be considered a bearish SMT. So if NQ sweeps this high and say ES doesn't, and then we continue down, that's considered a bearish SMT, which is just an indication that prices will continue low. So now that we're there, what I'll do here is we'll go over to our trading view chart, which is where I do most of my markup at. And it looks like we're getting some manipulation to the upside here at the open. Got about 2 minutes left in this 5-minute candle. What I like to do as well is we'll go up to the 1-hour chart here, and these 1-hour highs, 1-hour lows. So what this tells me, here is our previous 1-hour candle. This is our previous 1-hour candle here. So being as though price has already swept the high on our previous 8 a.m. candle, what I like to do now is look for some indication that we're going to head to the low of this of the 8 a.m. lows. So we swept 8 a.m. highs at the open. So another strategy that I have, or confluence that I have along with my core ICT strategies, is if we swept the 8 a.m. highs or swept 8 a.m. lows, I like to look for the opposite at the open. So being as though we swept these 8 a.m. highs at this previous 1-hour candle, what I'm looking for now is some sort of rejection here at these these highs, and some indication that price wants to go lower to sweep these lows. So as of now, I'm looking at this 1-hour inefficiency, this bearish fair value gap here. Once we tap into that, we may reject downwards. I'll go to the lower time frames. We'll go down to the 5-minute, and we'll see that's a nice 5-minute candle there. So we were correct on our pre-market warm-up. I could have held that trade a little bit longer, but like I said, it's a warm-up. I'm not there to gain super high profits on the day. I do expect prices to continue to the downside after this manipulation to the upside. But in retrospect, yeah, of course, yeah, you should have held it, made some more money. But when you're in a trade, you don't know how far up it's going to go. It could have reversed at any time. So we are seeing some rejection here at this 1-hour bearish fair value gap. We're seeing some hesitation. It still wants to go a little bit higher. How much higher it goes is yet to be determined. We can allow wicks all the way even past this. We don't want any bodies, and doesn't look like if it does not body in this bearish 1-hour fair value gap, that shows some good strength to the downside, some good indication that we'll be heading for lower prices down into this lower 8 a.m. level here. So this is our 8 a.m. low. That's our 8 a.m. low there. That's where let's see. We'll put it there. As a matter of fact, yeah. Well. So that's, like, as I said, we swept these 8 a.m. highs. That is a possibility. We could go as far up as to these this daily inefficiency, which, as I mentioned earlier in the stream, was draw on liquidity. If I see some indications that we're headed higher, I'll continue with the longs for a continuation play. And because at the open we could see continuation, we could see manipulation, and before the distribution we had some consolidation. We could see the manipulation and distribution, consolidation, and then continuation. So let's see if we're going to go continuation or if we're going to go to a manipulation to a distribution. So we did create a 5-minute fair value gap here. We created a bullish fair value gap here. If we come back and retest this fair value gap, I'll shoot up for higher prices there, up into that daily inefficiency, which would be at the 220 area, 29,220. So let's see. Let me get myself ready here. So we're here. That would be our line there for TP. This is the 1-minute chart. That's our 1-minute chart there. So I'm all ready for a set to take a trade here on the 1 minute. And this is my this is Trade-Of-8 platform, my Lucid account. This is a 50K Lucid account. So we're experiencing a pullback here, retesting that 5-minute. Got about 30 seconds left. We got a nice rejection off of that 1 hour inefficiency there. So we'll see. So we got these fair value guys stacked on top of each other, which may give us good indication that we're headed towards that daily inefficiency before we see lower prices down into these 8 a.m. lows. Got about 4 minutes left on this 15-minute. We have a nice trend line liquidity all the way up to these highs here. So let's see what price wants to do. We are seeing some rejection here on the 1 minute. I generally like to see a little 1 minute confirmation here before entering. So what I'll do is I'll take a jab here. What I'll do is I'll do about half half risk there, and then we'll add if we see some more confirmation on the 1 minute to these higher prices. So let's see. So I'm waiting to see if we do one more sweep lower, at least into this 5 minute gap here before heading to these higher prices. Being as though we're seeing some hesitation here, tells me price may want to sweep lower one more time before going to the upside. If not, and we miss this trade, what I'll do is I'll wait for price to hit that. Daily inefficiency and look for the higher probability trade on the shorts. We got about 15 minutes left on this hourly candle. See if we inverse this hourly inefficiency. I don't know if I'll wait that long, because we may tap into that area before that. So we didn't tap into this 5 minute gap. It's kind of like inching up, but as you can see, there's not a lot of speed, not a lot of volume there to the upside. So it may slow crawl. We may get a slow crawl up to the upside there. If we get a pullback here, we're not creating any fair value gaps on the 1 minute to the upside. But longing in such a premium range is not what I want to do here without a pullback. So being as though we're in such a premium range, I'd like to see a pullback into this inefficiency and then to the upside. Because entering now, we could enter for the long here. You see how price is hesitating. Price could just decide to go down. You know, how far? Maybe sweep these lows, maybe down into here, down into this 1 minute inefficiency here, and then go higher. By that time, our stop loss is a little bit too much. So I'm just going to be patient here. I'm not going to get FOMO and try to FOMO into these longs. We don't have that much to get into that our TP there. So we just started a new 5 minute candle here. But which just means there's not a lot of speed to the upside there on that. So price really hasn't really given me indication that it's confident that it wants to continue to the upside without first pulling back. So we tapped into this 1 hour inefficiency here. So I don't really put too much weight on that right now, because we haven't inversed that 1 hour. Got about 13 minutes left on that 1 hour candle. And we have a 5 minute order block down here. This 5 minute order block could pull back down into there. But we are starting to pull back here, which is good. So if we pull back down into this inefficiency, let's see what ES is doing. So we do have a 5-minute inefficiency here on ES. If ES taps into it, that could give us indication that NQ will follow and go to the upside. So if ES taps into this 5-minute inefficiency before NQ, we could still take a jab here on NQ. So let's see. Looks like there we go. ES tapped into that 5-minute. Let's see what NQ decides. Let's see what we're doing here. Alright, so he has barely tapped into that 5-minute. I want to see it. I want to see ES sweep. There we go. I wanted to see it sweep that wick there, which it did. Let's see what type of aggression we get from there. It's going deep into that inefficiency. Now if NQ sweeps those wicks there, let's get rid of this. We've swept the London highs there. Let's get rid of that. We just started a new 5-minute candle. It's like we're trying to push to the upside there. Let's see if we can. We do have a 1-minute inefficiency there. That was created on the way down. If we inverse that, we inverse this 1 minute here. That'd be good to the upside. But you see how price is going down here. If we would have tried to take those longs there, we would have definitely got burned. Definitely got burnt on that. So let's see. Let's see where we're going here. This is our 5-minute. I'm going to see. We do have a 1 minute here. We do have a 1 minute here. That was created while price was going to the upside. So between the top of this wick and the lower of this wick created a gap. So if price fills this gap and closes below it, that would be an inversion, and that would indicate that we're ready to go to the downside to get some of this liquidity here, and we'd be shooting for these lows, which will be in alignment with those 8 a.m. lows that we spoke about. We got those 8 a.m. lows at the 981 area there. So we inverted to the downside here. So I may be looking, if we come here and retest this area, this 1 minute. Yeah, that's what we're doing. So I took a small there. I took a small 2 micros there. Looking to add if we get so we bounce into this order block here. We may see some rejection off of there. If it does, I will close this trade and look for a different entry. But hopefully we're just seeing some resistance from hitting that 1 minute order block. This was an area where we've seen some strong volume to the upside. So we're currently in 2 micros shorts on the 1 minute, shooting for those 8 a.m. lows. We swept those 8 a.m. highs, rejected off of the higher time frame PD arrays, the 1 hour bearish fair value gap. So, and looking to sweep these 8 a.m. lows, and still overall maybe aiming for that daily inefficiency, that bearish fair value gap. So let's see if we can get down to these lows here. But with these wicks here are showing some resistance to the downside. We had some strong movement towards these lows, so hopefully price can hold up here and we can continue to these lows. Starting to see some resistance. We got our fair value. We got a 1 minute fair value gap here, which price is starting to respect this one. Then that's when I'll add to try to increase my position, showing that price is wanting to go to the downside. As of now, we're respecting these lows. So let's see what we do here as far as this 1 minute fair value gap. Got about 8 seconds left. So we are respecting this, where we wicked above it, did not close. But there is some major resistance here at the bottom. So let's see. I don't have a problem with closing this trade out and looking for a better entry before we get too deep into any type of drawdown. So we're currently in the 950 macro. Let's see if that macro can carry us down to lower prices. We are respecting this 1 minute fair value gap. I want to add. Depending on how we close this candle out. If we get a body close below these wicks, I'll add. Try to increase my position size here. Got about 2 seconds left. We are going down, so I'll add. Now we're in. We're in about 4 contracts here. So what I'll do is I'll come up and we'll take some profits here as we continue downward. A stop loss there. Don't want to get rammed through on that. So we break below these lows here. We did wick below it. I'd like to see a nice strong body below these lows. See a nice strong body close below these lows. We did wick below it. Let's see, we're currently in that 950 macro. That macro is between 950 and 1010. In between that time, let's see if we can deliver down. We're approaching our first take profit here. We'll trim off about half. 2 micros. We're up about 279 right now. We took our first TP there. And it looks like we'll get that body below. We get that body below, I'll start to drag my stop loss. So I bring it down just a little bit there. So what I'll do is I'll drag my stop loss here in profit. So no matter what, we see some profit on the day here. Matter of fact, I'll pull it up here. I don't want to get wicked out and then hit TP. I'll give it some room to work. We're still in profit, but I want to give it some room to work to get down to that take profit. Get these last 2 micros. But either way, we're in profit. We'll take a win on this trade. And I owe a lot to my pre-market warm-ups. It does give me a rhythm as to what price is doing. I get in rhythm with the charts, get in rhythm with price action. It allows me to exercise patience because I've already taken some trades. I'm gonna drag the stop loss down a little bit because I'm paranoid like that. I like to lock in profits, and looks like we'll hit that TP. What I'll do is I want to drag it. I'll drag our stop. Oh, there we go, full TP there. So we hit full TP there, not too bad. Up 377 on that trade. We're currently pulling back. What I'll do is I'll reassess what price is doing and see how far down. I just aim for that low hanging fruit there. We got that low resistance liquidity on that trend line. So we got in basically at the top of that low resistance liquidity line there and brought it all the way down. I was in at half price in the beginning at 2 micros. We increased it to 4, which was almost my full risk amount. I usually put on 5, but at this point I'm not complaining. We did pretty good on our initial trade, pretty good on our analysis there. So let's see. At the open, price manipulated higher. It wasn't that strong of a manipulation leg, and then we distributed lower for that 10-10 macro. It looks like we'll continue to go lower, maybe even to these lows here. But right now I'm going to maintain my initial draw on liquidity, which we may not see until the PM session, which was that 29,220 area, the very beginning of that daily inefficiency. I believe ultimately before the day's end we'll be shooting for that draw on liquidity there. Right now what we're doing is price is sweeping these lows and filling some gaps here. We got some nice relative equal lows down here. So what I'm looking for now is is price respecting these bearish inefficiencies and continuing lower. Looks like it is. We're holding up here at this low here. We haven't got a strong close there, which looks like we're pushing down farther now. I kind of want to get back in until we get to these lows here. I'm going to check the higher time frames here on the 5-minute. So boom, we've inversed this 5-minute fair value gap. We inversed here with a body close. Looks like we retest and we're shooting lower. And we do have midnight open here at the 900 area. So I may be shooting for that 900 area there. So this is our 900 area here, shooting for that midnight open. You see why I didn't jump in there? Because ultimately I do believe we're going to the upside here, but we're kind of in a consolidation mode right here. Let's see what held us up right here. We got these lows here, nice relative equal lows here, and looks like we may be pulling back. Not too many inefficiencies created on the way down, at least on the 1 minute, for us to see if price is respecting those gaps. Our last inefficiency was here, which price did respect. We went up as far as consummate encroachment, wicked above, and then continued to the downside. But along the way, its price has been balancing along the way, which pretty much tells us that there's no reason for price to go too far, to retrace too far backwards, except for into these bearish order blocks that price creating. So these up candles here would be considered an order block. So once price closed below here, we've had a bearish 1 minute order block come down here. Then we have an up candle here. So if we're going there, and we may look at the bottom of this bottom wick here on this up close candle, price taps into this line here and rejects. That's good indication that we'll be headed lower for continuation to the downside. What would make it even stronger is that we do have a fair value gap here above it. But if we had a fair value gap in this area, that would give it a lot more confirmation. But let's see, because we could go up past this into this fair value gap and then shoot lower, creating a lower high. But what we don't want to see is price break this 1 minute high here. We don't want to see price go above this line here if we're looking at further continuation to the downside. So it looks like we're wicking above. We're wicking above this line here. And showing some resistance. We did create a 1 minute fair value gap here. I'll just use this box here to the upside. So we're approaching another setup here. If we inverse this 1 minute fair value gap, having rejected from here, then I'd be interested in maybe getting into shorts, maybe even a short scalp to this low here. Maybe put on a little bit of size. And I'll just keep it. So right now what I'm doing, I'm looking for an inversion of this 1 minute fair value gap that was created on this pullback to the upside. We invert this 1 minute fair value gap with a body close below. Then I'll shoot for a short at least to this low here. Got about 20 seconds left. So we respected this order block here with the rejection as indicated on this top wick of this 1 minute candle. We got about 2 seconds left. Doesn't look like we inverted on that candle there. So we didn't invert this 1 minute fair value gap that was created on this pullback to the upside. Looks like it's respecting it. That could be indication of more continuation to the upside. Right now the market could be trying to trap longs by faking us out here. People will go long and then continue down to the downside. So let's see. It may go without us before inverting this box. I'm going to stick to my strategy here. We could preemptively enter into a short, having not closed below this box. But as price is going down, we're up. Why risk it? So we got about 7 seconds left. We get an inversion. I'll put on a little risk here. 2, 1. We've got a small body close below there, but however, it is a body close. So I'll get into that one. And I'll put a stop loss there because I will drag it as soon as possible. Well, I'm going to give it a little bit of room. Let's give it a little bit of room. If it tags us out, it tags us out. It wasn't that big of a body close. It was a body close. It might tag us out. which right here would be about 50 bucks, 60 bucks. I'm not too worried about that. So it was worth a try. It fit my model. We inverted below this box here. Now it's reclaimed it and going to the top. So right now it looks like it created a higher low, and we may be headed back to the upside. It cost me about 50 bucks to learn that lesson. Either way, we did complete our objective here. We swept those 8 a.m. highs, came back down and swept those 8 a.m. lows. Now what we'll do is we'll look at the we'll get rid of this 5 minute here. Open this up here. I like to have one chart open here. And what we'll do is I'll drag it over to this 5 minute inefficiency right here. That was created on the way down. And let's see if we get an inversion of this 5 minute. But it looks like we're headed back down here on the 1 minute. I may get back down into there. And we may be looking for some scalping. So we are valid because we did break below this box. We did break below this gap and close. Although price is being a little wicky here, it's respected this high. It's respected this high here. We break below here, then this will be a nice bearish order block, indicating lower prices. So let's see where we're going. I still like this low right here, honestly. I still think prices, we're going to sweep that low. So I'm going to enter a quick scalp here just because we're retesting this area. I like the fact that we're coming back down, retesting this area. Get in. We're already up 160 bucks right there. I'm going to close that out. So that was a quick 160 bucks. I put on some risk, put 10 micros, which is equal to 1 mini. We did hit that low there that I anticipated, although I cut the trade before we hit that TP, just because price is so volatile. And I do believe that ultimately we're headed up to our daily draw on liquidity, which is here. This is a nice pullback, aiming for this area. This is the kind of pullback you want to see. Will it happen on the AM session? I don't know. We may have to wait till the PM. If it was going to sweep this, if it was going to head towards during this AM session, we would have already seen a sweep of these lows a little bit more quickly. Although the market's only been open since 9:30. We're about 45 minutes into the open, and we've already swept some significant lows here. We are headed towards midnight open at the 900 area, which is here. So that is also a major draw on liquidity. So we're up about 419 so far. And then there's two ways we could have did this. You could do it the way that I'm doing it here, as we're doing tight stop losses and quick exits, run in profit, or we could have built our position like we started with the 2 micros, which I would have done if I could have put my stop loss here. But being as though we entered here, having a stop loss up here would have been a little bit too much. Stop loss there, then we let it play out, and I have confidence that we're probably going to go down to here to this midnight open, and then you get a position there and you just continue to add, and then you add up until a certain point, then you just walk your stop loss down, and continue down until it either wicks you out on the stop loss or we hit full TP down here. So let's see. So right now, what I'm kind of doing now, as we enter and exit these trades, I just look for new setups as we continue down. So right now, we've created another 1 minute fair value gap to the downside, and this is more of a difficult way to get in and out of these trades. But for me, it's a more secure way, because, you know, I enter on my setup, staying true to my strategy. We get in the trade, whether it stops me out or take profit, the trade's done. I look for my setup again. If it continues to show me my setup, it gives me more confidence that we're going in the right direction. So right now, what I'm looking for is a sweep of this upper wick here into this bearish 1 minute fair value gap, which was created between the bottom of this wick and the top of this wick. So if we sweep the top of this wick into this 1 minute fair value gap, respect it by not bodying above it, we can wick above it, but I don't want to see a close above there. Then I'm confident that we'll at least be going down to these equal lows here for a quick scalp. And we got about 30 seconds left. It may hit it before we get a close below. That's another risk we may take. Shows a nice rejection here. I keep these moving averages here. This is a 20 moving average. These also act as support and resistance areas. So you can see the price bounced off of this 20 MA area. We're respecting this 1 minute bearish fair value gap with the wick. Got about 7 seconds left before we get a new candle. Nice rejection off of there. We continue lower. I want to see some speed to the downside there. We do. I'll hit that. We'll see if we get it there. We'll put our TP there. And we got a major rejection off that area there. That's not what I wanted to see, but I'll hang in there. I don't want it to ruffle my feathers too much. But if we close above this box here, I will exit this trade. I won't hold on to it. I did put on some size, anticipating that we'd hit these relative equal lows here. We got about 9 seconds here. So we are inversing this box here. And so now we're going down into our direction. I know we did inverse there, but I'm kind of want to hang on to this to see if we hit these relative equal lows. We still have midnight open down here, so I didn't want to give up on this trade, which is a good draw on liquidity. We have been in a downward trend there. So I want to get down in there. It's kind of dancing around there. Right, I'm hovering that button because I will manually close before we get there. It's trying to shake me out of my position, which if I would have allowed it to do it earlier, we would have been down about $700. Currently, right now, we're in this going into our direction. And I'm not going to let it play around there too much longer. Just waiting, 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 waiting. And that's what we got there. So I could have held it out there until we got to TV. It probably most likely will hit that. We got up. We did take up on that trade, up about $100. So we're up about 514 in total so far. And as you can see, we still didn't hit that area there. And that's what it does. It's trying to see if you're going to hold it out or you're going to be static in your position. But it's playing. NQ does that. I'm not one of those traders who's going to say either TP or stop loss, but we are engineering some lows here. So the market does create liquidity. That's how the market moves. So that's what it's doing here. You see these lows lining up here. That's not by accident. It's not just we have these random buyers and sellers that are selling the market right to this point here. How precise would that be? Everyone sells. We got millions of people in the market right now making trades, and they all sell right to this area. No, that's the market manipulating price right there and creating liquidity. That's engineered. These are called engineered lows. So how long will this continue? Who knows? This may be enough, and then we have resting orders right here. So when price sweeps that, that's liquidity, and that's what we're doing. So another strategy that we see here, these engineered lows, we would go to our closest inefficiency from the downside, and which would be here, which I don't carry too much weight, but this is no longer, I wouldn't consider this a inefficiency anymore. I would just consider this an area of interest where price has reacted from in the past. So if we get here, price reacts from this area again and shoots lower, then I'd be confident that we would be ready to sweep these lows here. So there's a lot of engineered lows here being created. Also, there's a lot of liquidity here being created for our way back up towards our daily draw on liquidity, which is here, I'm still confident in these lows. So there we go. We swept those lows, and I do believe we'll go as low as midnight open to 28,900 before heading higher. Maybe even lower, but at least to the 28,900, which will be that midnight open, which is a major draw on liquidity. By that time, as you see, we're creating trend line liquidity here, low resistance liquidity. So above each one of these highs are resting orders where people have placed their stop loss and go short, place their stop loss and go short. The more that the market does this, the more liquidity is being created. So when we sweep our targets to the downside and the market's ready to go, we have all this liquidity that it can scoop up on our way to our target. So that's how the market moves. That's why the market moves. It's all about liquidity. Go from liquidity to liquidity. So let's see. So let's go down to the 30-second time frame. Sometimes it's kind of difficult to get there from here. And you know what? I'm not even going to do that here. Sometimes I like to go down to the 30-second to see if there's some inefficiencies created there. We have a small inefficiency here, which was rejected. And being as though there aren't many inefficiencies created to the downside here, it's just that price is pretty balanced and it has no reason to go to retrace to balance price. The only two reasons it has to retrade is to balance price or to sweep liquidity. So price is pretty balanced on the way down. So the only other option that's left is for the price to sweep liquidity, which would which would be this high here. That would be our next draw on liquidity there. Let's get rid of some of these lines, clean up this chart a little bit. This is an area of interest here. This is our closest area of interest here. So I'll get rid of that. We'll get rid of that. Let's clean. I just like to clean up the chart. It gets a little messy sometimes. Usually don't like to draw on my on the chart that I'm trading on, but it just happens to be that way when you're in the middle of making these moves. So it's good when you see that ES and NQ are aligned. Last week it wasn't so much. NQ would be pulling in one way, ES would be pulling another way, and it causes for a lot of consolidation, a lot of indecision, because these two markets are correlated. They rely on each other. So generally you'll see the same pattern with these two indices. You know, these are two different. This is the S&P 500 and this is the NASDAQ. So although they are two different assets, they look pretty much the same as far as price movement. And that's because the market makers use these two to balance out their trades, and they're heavily correlated with each other. So usually when you see one of these indices act a certain way, you can almost be assured that the other one is doing the same thing. And that's why we look at SMTs. So as I said before, SMT, it's basically, you see how NQ swept these lows here, and ES also swept these lows here. Now if NQ would have swept these lows but ES didn't and continued higher, that would be called a bullish SMT, meaning that NQ have already swept the lows. So now ES has no reason to, it doesn't necessarily have to go down to sweep these lows, and it's an indication that we'll continue higher. Right now it looks like ES is a little bit more bearish than NQ, just based on, you know, how far below these lows it's closed. So it looks like we've swept most of this sell side liquidity on both ES and NQ. We haven't, of course, gone to this area here. So as of now, it looks like we have kind of a bullish SMT here, where ES swept these lows here, where if you look here, NQ failed to do so here. So they both swept here, 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 here. We get here, NQ stops, ES swept, and now it's making a move to the upside. So now once we start to see price break highs over here, that's when we're saying now we may have switched from bearish, when this bearish pullback, to more of a bullish sentiment. So we'll start to see. And right now NQ is a little stronger than ES. So again, ES swept these lows here. I'll just draw it out so you can see it. ES swept those lows here, and now we're starting to test these highs. We got a wick above these highs. This is our midnight open on NQ. ES swept these lows here. NQ failed to sweep these lows, and now we're continuing higher. On NQ we do see a break of structure here. See a break of structure here where we broke these highs. And we broke this high here. This is an interior high. We broke this interior high here. Let's see. Next, we have this high here. And then we have this high here. This high here. We're currently above our moving averages. Another confirmation that I've used in my core strategy. And when I say core strategy, I use ICT, fair value gap inversion. So I like to invert fair value gaps, usually on the higher time frames, the 15 hourly, and then I'll use the 5-minute. So we invert this 5-minute bearish fair value gap with a body close above it. That would give me indication that we are bullish. And then I'll go down to the 1-minute and look for a bullish inversion fair value gap and take my entry, or at least a retest of a bullish fair value gap that was left behind on the way up, and then an entry to the upside. Right now on the 5-minute, we're here. So I'd like to see, so we'll look here on this 5-minute to see what happens as far as if we respect this inefficiency or we invert it with a body close above. This was our 8 a.m. high here that we swept during the open, came back down, swept these lows, and that was our trade. And we did pretty good. It's pretty good. So I'll get rid of this line here, just try to clean it up a little bit. Line's not working. There we go. So we swept that high, came down, created a bearish 5-minute fair value gap, respected that 5-minute fair value gap, came down, swept those 8 a.m. lows. Here we are on the 1 hour. We have a 1 hour bullish fair value gap here. So we have New York open. I was expecting price to go down into this New York open, maybe even this 1 hour fair value gap, and then go higher to our daily objective for the day, our daily drawn liquidity. But as you can see here, this is a major area of interest here. We see a lot of price action here, a lot of resist, a lot of reaction here with these wicks. It was here. So now as we go and we've broke above here and we come back down, what was resistance should now act as support, and we continue higher as price on this 1 hour. We got about 27 minutes left on this 1 hour candle. We got a big bottom wick here, but we also have a big top wick here. So this wick here is important because price is reacting from this wick, So what I tend to do is I'll mark this out with some levels, and as we start to break above these levels, shows us that price wants to go higher. Generally, if we break above this halfway point, this 50% area here, we should be headed up with no turning back. So we usually get up to this 25% area here. We break above here, and this is on the lower time frame. Of course, this is an hourly wick, but what I'm looking for, hold on, let's see here. I just want to check something on the 4 hour. Okay, so we still have this 4 hour bearish inefficiency here, which is being respected. It's being respected by these wicks. We haven't even bodied into this at all with these 4 hour candles. So there's major resistance in this area here. So when we finally do, which we've already had our new 4 hour candle. So once we get above this 4 hour fair value gap, which we may not body, if we body above this and come back for a retest, we're looking at higher prices for the next few days here. We have inverted this bearish fair value gap where we closed above here. It was enough to bring us all the way up and then come back down, retest this area to come back up. So now what we're doing is we've retested this inversion again. We're on our way back up, and this time we'll see if we can get a body at least above consummate encroachment of this 4 hour fair value gap. And what I'll do is I'll look on the lower time frames. See, I want to bring this. Usually I have these, so I want to see it on the minute chart as well. So I'll bring that down. Hold on, let's see. Also want to see it on the 1 hour. So we'll go down to the 1 hour. Okay, even on the 1 hour, we're respecting this fair value gap. So even though this is a higher time frame fair value gap, what I'll do is I'll look on the lower time frames, say like the 1 hour, and see, hey, did we body within this this inefficiency, or are we continuing to respect it? As far as an inversion, price is continually respecting this this 4 hour inefficiency. We did create a big top wick on this 1 hour candle's previous 1 hour candle, and so I decided to grade it with my 3 levels here. We have a 25%, 50%, and a 75%. We get above this 25% level also with consummate encroachment of this 4 hour fair value gap, start to hang above there. I'll start looking for indications of higher prices and aiming towards our daily inefficiency, our daily draw on liquidity. So it is looking good. We do have a strong bottom wick on this current 1 hour candle. So now what I'm looking for, and I'll just get rid of this, was just a resistance area that I created there just for talking purposes. So what I'm looking for is now that we've rejected off of this previous resistance area, which just turned into a support. It just turned into a little support area here. Basically here. There we go. That's our little support area here. I'll change the color so we don't get it confused. So that's our little support area here, this little gray box here. This is where price has been holding up on the hourly chart. I'll just go down to the lower time frames here. So let me darken these lines up a little bit here. Let me darken them up a little bit. There we go. Because we'll be looking at these levels here. So here is that 4 hour inefficiency on the 15-minute chart. On the 15-minute chart, we did body above it here, came back down, and now we're hanging out below consummate encroachment of that 4-hour inefficiency. The price has been going both directions this morning. Of course, at the 9:30 open, we came above our 8 a.m. highs, and then came down to swept our 8 a.m. lows. We hit our area of interest here, respected our 15-minute bullish fair value gap, and now we are looking at this current 15-minute candle to see if we'll get up into this 4-hour inefficiency above consummate encroachment and to this 25% graded area of that previous 1-hour wick. So right now it just looks like price is kind of indecisive as to which way it wants to go. All right, so on the 5-minute, we created a higher low, respecting this 5-minute fair value gap and respecting this 4-hour inefficiency, which may give us indication of lower prices, ultimately hitting our target of midnight open. And these lows, these London lows, and ultimately this sell side liquidity. So let's see. And that's the difference with these time frames, because we go up to the higher time frames, it's just looking like price wants to continue higher, with this 1-hour bottom wick, and respecting these inefficiencies and this area of interest, which has turned out to be an area of support. So it has some hurdles to jump through. We don't have to go too much farther down to hit the midnight open before going higher. So price may come down. Wick, it may go as far as the next 1-hour candle. So this next 1-hour candle will show us this is more of an indecision. It's turned out to an indecision. We got about 18 minutes left. We got about 18 minutes left on this current 1-hour candle. So let's see. What the market wants to do here. And as I said, as we go down to the lower time frames on the 5-minute, just looking at we see these top wicks, which is telling us that price indicating lower prices. So it's looking like right now we are setting up for the market to hit our daily draw on liquidity during the PM session before sweeping these lows here. So right now, currently, what we're doing is probably waiting for this new 1 hour candle. We'll come down, sweep down into this New York Open, maybe even as far as these London lows, and then during our after lunch, our PM session, go up into our daily draw. That's what it's looking like now. But as is, we're just going to stay patient, wait and see. I don't know if I'll jump in any more trades right now unless I see some indication that price wants to swing down lower. We are hitting a 1050 macro. I just want to see some indication that price is made its mind up that it wants to tag that New York Open. I want to see NQ here. Let me clean up some of this here. I got a few indicators here that I use from time to time. It picks up some of the things that my naked eyes will miss. I don't know if I completed my thought here, but sometimes I'll use these moving averages as confluences when it crosses. So you see the 8 will cross over top of the 20, which indicates higher prices. Right now we got the 8 crossing below the 20, which indicates lower, and then price starts to reject off of that 8 MA. So if I see some indication here on the 1 minute as in terms of a respecting a bearish fair value gap, inversion fair value gap, then I may be interested in getting into lower prices for a short. Looks like we're headed down there now, but I don't quite have any indications or any setups according to my strategy to jump back in. Well, we do have a 1 minute bullish fair value gap here, which if we close below would be an inversion, which would allow me to jump into this trade. Put my stop there. And so if we were to body below this 1 minute fair value gap, maybe retest, I'd get into a trade and aim for these London lows here, which would be at the almost at the very bottom. We would, of course, take some of our take profits here. We go here, which is almost a midnight open, is a 1-to-1. That would be our very least. And then, of course, we go down here, maybe for a standard 3. A 3-to-1 will be there. Taking profits here at midnight open, and then here for a full TP. But give me 1 minute, guys. I'm gonna check and see. Check on the family here. We got the babies upstairs. I want to see what's going on. The wife's texting me, see if our oldest left for camp yet. So give me 1 second. I'll be right back. Alright guys, I'm back. So it looks like, there we go. You set that up. So if you are watching, let me know in the chat. I haven't been able to chat with anyone today. Looks like we rejected off that 1 minute fair value gap and we're headed lower. That's a valid entry there. I was away, so I missed that entry, but I left the toolbar there for anybody wanting to take that trade. So, and I don't look at it as I missed a trade or anything. It was set up. It is what it is. We've had a few good trades this morning. Could allow us for a re-entry and could come back in and retest this area here and go back down. But this is a nice 3-to-1 here. We'd be trimming some profits here at midnight open, which would be our first target, and then ultimately down to these lows here. TP, drag our stop loss to break even as we get to the midnight open. So let's just see what it does. We'll watch this trade, see how it goes in. I'm not in this trade. I was away from the desk when it triggered off. But let's see if we were to take this trade, if this setup. We've been in and out of a few trades, and what I was saying earlier is I'll allow for my setup to show itself before entering into a trade. So I'm not just taking haphazard any old trades. So it's looking like it's setting up for a re-entry here. If we tap back into this 1 minute fair value gap, let's look on the 5 minute, see where we are. Okay. So on the 5 minute, we had an entry here rejecting off of this higher time frame inefficiency. But on the 1 minute, we're coming down, and this gray box was our area of support where price has been holding up and creating these engineered lows. These are relative equal lows, which price just swept for a nice sell side liquidity, probably tapping into this this New York open. As soon as we get a full tap into this New York open, we'll bring our stop loss down to break even and make this a risk-free trade. But this would be our first TP here. This is TP1. So now we'll bring our stop loss down, break even for a risk-free trade. That's TP1. This would be TP2 here. So we're coming back down. This would have ended up being a pretty nice trade here. So, yeah, I'd definitely like to have been in this trade here, but you know, I'm still working on a few things, Chad. I'm working on my discipline. I'm working on, holding trades longer. I'm recognizing my setup. So we identified this setup. Currently, if we would have taken this trade here, if I wasn't away from the desk, I had to unfortunately move away. Yeah, we would have taken this trade here, got in, taken our first take profit, and come down, dragged our stop loss down into a risk-free trade. And now we're currently looking for our second TP before we head it down into full TP here, which will be 3-to-1. But of course, after we take our second TP, we drag our stop loss down and start to walk it down and leave a runner on. So we would be in this trade probably about 5 micros. First TP would be about 3 micros. Second TP about 1 micro, and then we leave 1 micro on as a runner to see how far down price goes. So right now we're in that 1050 macro. So these were the levels that we marked out earlier for price to hit, and we are hitting those levels. We got in here at a small pullback with these highs, and we continued lower into our sell side objectives. Yeah, so we're continuing down, following that 8 MA all the way down. We had that bearish cross over here, which was a further confirmation for lows. This was our area here before I had to walk away from the screen that we were looking to get into the trade. This is where we got in, came down, and we've hit our first TP at the 28,900s for the New York Open. And currently now we're headed towards our TP2. And then we aimed all the way down here, honestly. So if price does continue down, it will open us up for, it could open us up for an entry there. But generally it's about 11. I don't like to jump into trades this far in because we're approaching that lunch macro, which price action gets kind of funky around that time. So usually around, if I'm not in a trade around 11:30, I'm not going to jump in. That's been a rule I've been developing and trying to stick to. Honestly, this was the trade to get into on the downside. Secondly, what I'm looking at is I want to bring this here. Secondly, what I'm looking at, so this will be TP2. Secondly, what I'm looking at is our draw and liquidity, which in the beginning of the stream I said if we don't head towards that way during the AM session, I'm looking at that draw to be during the PM session, which is here, which is that daily bearish fair value gap. So I'm probably looking at now the way price is going. We manipulated higher, distributed lower for our AM session, which is pretty smooth price action here. It took a while for price. It took a second for price to show us with confidence that it's headed towards the downside, especially on these lower time frames. You'll see a lot of noise going down. On the higher time frames, you can see that price pretty much has been headed down after it manipulated higher, swept that liquidity. It's been going down. Nice pullback, which is healthy for any direction, any price direction, and then continues down. We're currently in another pullback here on the 5 minute, which may be setting up for a re-entry area here, so you could re-enter here even on the 1 minute. Let's see, we have a small inefficiency here.